All right, let's jump into things. Wednesday, 13th of August, just past 10 o'clock, so 10:08 actually to be precise right now. On 13th of August. So US CPI overnight. Wow. I swear, man, like US just cannot catch a break. Well, DXY just cannot catch a break in that at the moment. It's two steps forward, three steps back. Like it just keeps getting whacked and whacked. Look, it's still relatively kind of holding itself up a bit, but I mean, we've just had a little gap down, and they're buying it up on open. But geez, it just takes one hit after another, and that it just can't seem to put more than say, and I probably sort of being generous saying two bits of solid data back to back or supportive US strength, USD strength data back to back. And it wasn't so much last night with the CPI was like bad. It just wasn't what the market was expecting. As you can see here, we got sort of core month on month and the headline month on month. Both came in as expected. Like they were expecting a slowdown here, they're expecting a tick up here. This came in as expected. This sort of year on year is probably what the market was really looking for because, as I've sort of covered a couple of times, Powell said, look, he thinks inflation's going to be coming through. If inflation, if the jobs numbers get bad, that could be the thing that goes, okay, and that could sort of supersede the whole inflation argument. The job numbers were bad. And not only that, then you're looking for the CPI, and inflation hasn't, at least in this print, turned up. And so that's kind of like seeing the market go, well, hold on, wait, the jobs are bad, which you said could be the driver to make you sort of shift. And then the only sort of argument still then is that, oh, well, but hey, we've got inflation. And if inflation isn't sort of actually peaking up either, that could also be something that, sort of obviously puts a nail in the coffin for them in terms of sort of when they're going to have the rate cuts. Now, it wasn't only just that. Then you had Trump coming out just a couple of moments later, sort of going on saying that he was going to sue Powell. I don't know if he's sort of saying that he's going to sue him directly, but well, I mean that's the way the words were. So let's see if I can find it quickly. So this is pretty much sort of like obviously a copy and paste of the sort of the thing. So Jerome to Lee Powell. That's now lower rates, yada yada yada. Big loser. Yeah. Okay. $3 billion job that should have cost been a $50 million fix up job. Not good. So he's sort of saying that basically he's going to sort of like they've sort of blown the cash there. Here's a big hole. Like all the Fed is, well, sorry, the Fed, all sort of Trump and the administration over there are trying to do at the moment is just find whatever cash they can. You know what I mean? They've got this out of control sort of national debt, which seems to be sort of climbing and climbing. There's actually that sort of counter you can sort of go on and sort of find the sort of the live update of where it's actually at. Share sort of found this one here. So yeah, I don't know what's going on. This trying to say some sort of advert on this. This is probably just exactly the same. Oh, okay, this one's free at least. Yeah, no doubt there's some sort of cost involved with it. But yeah, this is the US debt sort of clock. And as you can see, look at the speed. I mean, it's just constantly growing. I mean, obviously, I mean, you're talking about the whole sort of country, but this has a whole bunch of information of sort of like, their stuff there. But this is really the one that we're looking at, 37 trillion that it's ticking up to. And so really, they're just trying to find money wherever they can with it. And that was the whole thing with Elon Musk, with the Doge or whatever it was. Um, Trying to sort of just recover whatever cash they can. But all in all, it just seems a little bit sort of ridiculous that he's going to sort of uh, threaten to sort of like sue Powell. Like everybody knows what it is. It's just sort of like he's pissed off because he's not cutting the rates, and so he's like going down the normal sort of path of it all. And I've said this a number of times. Like I'm a fan of Trump, but with these sort of things, I think to a certain extent, stay in your lane, because this kind of stuff just makes trading not really trading. It's you know what I mean. Like you got the market. Like if we have a quick look at just the reaction, I'll get onto the charts more in a moment. But just on the topic of this was the first reaction that sort of came down. Let's put it on lower time frame. This was the first reaction that happened as the CPI came out. It sort of market thought about it, and then started to rally up, and then Trump came out with that post. and the market went bang down like this over here. We had a couple of speakers in that obviously afterwards as well, which probably shouldn't may not have added. Let's have a quick look who they were. Barkin. This was the guy that spoke the other day who was actually a little bit more hawkish. I didn't actually see any of the comments from either of these two guys here as well. But obviously, all in all, not looking great. We've got federal budget balance, not a big sort of bit of data that I normally pay attention to. But again, look at the sort of direction that these things are sort of moving in. So, it's not looking sort of overly so rosy for the US in that sense. And this is what I say. They just keep having, it's moving forward, looking like it's about to break out, and then bang, knocked on its head. So that's where we're kind of at with it all. We had, of course, yeah, the rate policy yesterday, sort of from the RBA, pretty much as expected, even with the sort of price action. Actually covered on the weekend, sort of like, when we looked at sort of BOE and how that could sort of obviously have its move down and then later can still appreciate. So the market can move on from that pretty quickly, and that's what we've seen Aussie do, sort of really rally back up, and that's off the weakness of the US dollar. Basically, they said with the RBA that sort of like, they cut, they're happy to sort of look at more sort of cuts towards the end of the year. Productivity seems to be the sort of buzzword with these guys at the moment. It's all about productivity and how we're going to pick up productivity. Bullock sort of stressed a number of times that that's just I can't remember the word she used, but basically it's a estimation or an assumption. It's not based off a model, and it's not like they've gone, okay, look, given our things, we're going to see this. This is just what their feeling is. But that was definitely the sort of the buzzword of it all. And if you look at sort of like, the question time, that's pretty much what it was just time and time again with these sort of people. So, it's not looking great. Productivity slowing down, more cuts coming for the end of the year. Aussie rallied 80 point, no, what did he rally? 60 points or so off the low. So about just shy of 1% off its lows. But again, this is what I've been saying. Aussie is running off the back of what's happening with the US dollar. It's a lesser of the two evils, lesser of the two undesirables in this sort of sense at the moment. And that's why sort of like Aussie sort of jumped back up there because we had the initial reaction. I put a post on X of sort of like what I thought the price action would happen around it. It happened pretty much exactly. I said between 10 to 20 and then bought straight back up, and that's exactly what had happened. And then obviously sort of dribbled down afterwards. And now we had a bit of news coming out with the China. So the H2O or H20, I don't know, it's not my field. The sort of the chip cards or something like this that China's sort of saying, hey, look, let's just all use our own ones. Let's not use the Nvidia ones. And obviously, sort of that's a little bit any sort of head-butting between China and US is when risk takes a whack, and that very much sort of followed through to Aussie pretty quickly with that there as well. Just bear with us too. I'm just going to manage the positions. Yeah, so a little bit of stuff sort of happening overnight, a couple of headlines, but this is what I said at the start of the week and that. Sort of, I put these titles on these things, and this week is going to be full of headlines and bits of data, and RBA, CPI. A little bit quieter today. We don't have a great deal going on. We've got sort of wage index and that. This was another thing that they were saying with the productivity dropping with the RBA, well, with the Australian economy. The RBA was sort of saying that it's going to be harder for wage growth as well. So that could be another thing that sort of that, again, look, it's just so many things with the Aussie don't seem like such a rosy picture. I'm still surprised that it's held up as much as it has. But as I said, like, compared to its sort of peers, off the back of sort of incredibly weak US dollar, other things are running sort of like, multi-year highs. Aussie's, stuck in mid 60s. So I still think the risk is to the downside. But as we see the market bash into DXY over and over again, that's what's really sort of going to sort of keep Aussie elevated. But as I keep saying in that, I think the risk is that the US finds its feet and gets on a roll and runs for 2 or 3 months, and I think Aussie moves back down towards sort of 60, 61. That's my sort of outlook moving forward, and particularly if we see sort of what happens with the stock markets as well. Like everything sort of ripped overnight. Look, I don't cover the stock market a great deal with this sort of thing, But if we have a quick look at sort of what ASX is doing just on the open, I mean, actually, this is it right here. Take a fresh one. I mean, that's the ASX straight on the open. So, people are still looking happy to sell this sort of thing. And, despite sort of like, coming off the back of strong US sort of movements overnight, they're very much happy to sort of whack into that. Now, you've got to look at these things again, sort of in context. So let's take this out here. Whoops, not this one. This is this latest sort of push up. So, I mean, it's, whoops. So that's in context of its last sort of drive up. It's a bit bigger. So as you can see, it's just pushing past the 23%, but that is a very sharp sell-off. I mean, we've seen these things before. Look at these sell-offs here, and bang, it recovers and makes it all new highs and yada yada, all this kind of stuff. But while things are supposedly sort of pushing back, that's not exactly a big sort of rosy picture as well. So just something to keep in mind. All right, so yeah, look through the rest of the session. German data, nothing interesting there. Bit of China data, nothing sort of super interesting. Actually, that's looking like a pretty massive drop off here. So how's it going in relation to other things? Okay, so there's a sort of fly up and down and that, but obviously this is a quite a substantial jump up here. Previous 600 up to 240 billion. Like, God, these numbers are just getting ludicrous when they're this large. But you can see last time they had the big sort of massive blowout and that came back down to 700 and then actually overshot down to 200. So I'm not sure how this is necessarily going to affect the markets, if it is at all, but just something interesting to sort of see when you see these large swings in numbers. Moving forward, that's about it through the session. So I think we got a little bit of a sort of quiet one today, a bit of a lull for the week through the session in terms of sort of news or data. Tomorrow, of course, then we're coming into that sort of infamous sort of 20,000 spam for the employment for Aussie. So this will be an interesting one to sort of see how that goes, and obviously we'll sort of cover that tomorrow morning. But that's a bit about it in the data front for the moment. So let's have a quick look at the charts. DXY. And this is what I'm saying, sort of like, it's obviously been bashed. NFP, ISM starts to recover, has a little channel, breakout, has a nice little squeeze point, came up the top over here. This was primed and set looking beautifully for a sort of flag breakout to the top. And then obviously, boom, data came out and bang, smack back down. And this is what I'm saying. Sort of like anytime it gets any sort of little rally, knock back on its ass. Look, with these kind of moves here, though, what I find interesting is obviously this is the most recent lows that we're looking at here. It's come down here, it's clipped out the lows, and it's trying to put in a little high low in the context of this little move here. So what we want to sort of see is this pretty much lines up across here, doesn't it? So this is another zone that we've had sort of, we've seen the market previously sort of react from. And once again, market sort of showing up with that being a little short-term resistance. So look, I think if you can actually sort of get a bit of a squeeze and we can put in a bit of a positive sort of day through here, let's just check an alert on here. Okay, recovery, bounce. If that were to be the case, then obviously just in the context of this pullback down through here, you've got a little higher low, and then you're starting to see a bit of a squeeze back up here. Now, this little area through the middle here was basically, it was a gap from back at the end of June. So, I mean, obviously going back a fair bit now, so being the 13th of August, but it did provide a little bit of resistance, as you can see a number of times. And also that was a little trigger point that I was using yesterday and obviously in the weekend, saying that, look, this above here, we might see a little bit of a squeeze. And that's what we got, push up to the top side here. Interesting enough as well with this, if this were to be, well, it is kind of a channel and channel break, I did notice if that was where you took your measured move from. Now, I'm not saying that this is necessary. This is purely just for my own sort of thing, and I'll probably have a look at this a little bit closer more often. But typically, I've always done sort of from the break point. So here's your break. These are your back tests. Your back tests can come down deeper than your break point because that can sort of just wipe out any sort of early positions. Like, oh, here's the breakout. Let's buy it. Stops here or stops here. Well, stopped you out, and then it moves. So that's interesting to sort of see if that were to be the measured move completion. If that were, well, yeah, there you go. But back to sort of where we're at now. This is obviously, as I said, it's taken out all these lows. That's the same level that the buyers or profit takers or buyers sort of stepped in. Now we're going to sort of see, is this going to sort of be like, okay, we've taken out these lows, can we recover? Because the thing is with these sort of bottoms, when it happens like this and you get these sharp pull downs like this, it always opens up the possibility that you get one of these very sharp move down and then move back up moves, and that's what leads to a squeeze break and push out like this. Now, I've been sort of bashing my head against the wall, sort of having any sort of faith in the US dollar for quite a while. But eventually it is going to sort of break and it is going to pop. And we're just going to have to sort of see, is this the time that the market goes, hey, look, that's all very well, CPI. Look, CPI wasn't great in terms of sort of like, it wasn't sort of like you're seeing a drop in inflation. It just wasn't what the market was expecting. So, as in, like, if inflation is actually moving in the other direction, well, and sort of coming down, well, you'd probably be further down over here. But really, the market's just sort of said, look, look, it's bad. It's not what we wanted, but really, it hasn't moved at all. So, does that? And this is the question. I'm not saying I have the answer, but the way that I'm sort of viewing it is this enough to make Powell go, oh, okay, yep, let's the inflation's not there. I don't think it is, because kind of they're in the same situation that he has been every other time he's been talking, saying, okay, it's inflation is at this point. And I think sort of particularly with these sort of like central banks, they want to see progress. They want to see it moving in the right direction. The fact that it's stalled leaves the door open to, well, if they do cut rates and that in theory will sort of add to the inflation, well, it's not like they've got that extra bit of room. Like, you know what I mean? It's not like sort of the car's moving very hard in one direction and you're trying to sort of like pull it back and you've got that little luxury of slowing down before it turns around. It's already at a standstill. So if you add inflation to this now, it's only got one direction to go. Well, if you cut rates and that adds to inflation, it's only got one direction to go. It doesn't have the luxury of, okay, we go from inflation coming down back to neutral, from neutral to increase, if that makes sense. So you're missing this part of it all. So I don't think that's going to be enough to sort of sway him necessarily. And I do think that sort of potentially we could see this at least maybe just sort of range through this area through here. I mean, look at how far it's been bashed since NFP. Look, I think I measured this because this is the low that we came out. There was some bit of data or something. I think it was the summit or the announcement of the meeting between Powell and um, Putin is what got this going off the lows here, and obviously second test down here, and back to where we are now. We're sort of taking out the lows. So look, it's hard to say because I keep sort of bashing my head against the head with against the wall with this, but look above 98.15. I think we have a little bit of a squeeze back up. Of course, if you sort of take out 97.89, then I think that's all she wrote, and back down and you're looking down in these kind of levels over here. This is a gap on the way up, so it's not really relevant now, but it is the 78% just below us of this large move from that last drive up. And yeah, not really anything too super insightful for this one here. But we've seen this a couple of times. Small gap down and then tries to rally up before sort of coming back down over here. But I think at the moment I want to sort of see what happens. Should it come up and test at least these wicks, 98.10, 98.12. If it decides to push through, then I think we could see a little bit of an undo of that mover through yesterday. Because as I said, CPI wasn't, it's not sort of like, hey, well, inflation, bang, it's beaten. And I think that's the main thing there. I think the headline from Trump, the second move down over here, is just a little bit of hot air, sort of garbage crap, to be honest. Onto gold. Gold still unable to sort of really rally much, and it's gold's actually been a great show. I've been short sort of actually. I got in a little early. I was short sort of Friday when we had that sort of issue with the spreads. But it's been playing very well, and even sort of throughout this sort of move over here. We haven't seen it really pick up and rally much at all. It's obviously trying to sort of consolidate through this area over here. Let's drag this out of here a little bit. Give that as a little top zone. And as you can see, it's pretty much just in a little box actually down here. So I think this is going to give us our direction, and I think that we're going to see continuation with this. Generally with these, I've covered this a couple of times, with consolidations, they favor, doesn't always happen, but they favor the direction in which the market moved into that little consolidation. So in this instance, obviously, sort of, we're moving into there, so that would lead to a continued move to the bottom side there. Look, it's not always the way. We are a little bit oversold here. It could sort of try and push back up over here. But as I said, that's why I'm watching US dollar, because I think if US dollar decides to squeeze, well, even on US dollar taking that extra whack, all gold was able to do was get back up into this range, save itself from having that breakdown a bit lower. But at the moment, I would say that this is probably just going to sort of dribble, and then drop back out the bottom over here. And then we're really sort of getting back down, 33.10, 32.80. These are the big, 32.80 is the big one. That's the one that you really want to sort of pay attention to. If you step out a little bit on this, I was saying this to someone the other day, but if you look at gold here, there's a couple of ways you can cut this up. One being this falling resistance that's come through here. This is the fourth time that it's really sort of reacted from this falling resistance over here. This third one here being sort of a bit of a failed breakout attempt, but that also locked in a bit of a, if you put on the daily, you can see a nice little range that it's actually been working through here. And the thing with ranges, the same with channels, the break of structure is what's an early indicator that you're going to see this thing fail and turn around. So as you can see, you've got a top. Oh, actually, disregard this one's down here, I suppose. But you go bottom, top, bottom, top, bottom. This needs to come up here to 34.40s before hitting 32.80s to continue this little flow on here. We saw this fail here, come back down, and then move back up to the top over here. As I said, that just one little, I don't even know if that actually didn't quite get down to the zone, very close. But the point is, that's the continuation. This is the range that we've now seen set up. It's confirmed at the top over here. This is where the sellers are. It's pretty well confirmed. This is where the buyers are sort of sitting here at the moment. So should this sort of come back down here and test this without testing the top side there, I think that's the time that you could potentially be seeing this bigger break. So there's a bit at stake for gold here, should this thing sort of want to break down here a little bit lower. That's the range idea of it all. The idea that you've got this triangle fake out here, counterbalance here, back into it here. This is another move that sort of like, this large sort of consolidation triangle. I had somebody who's, professional trainer, whatever, he was sort of saying, oh, look, it's just coiling. It's nothing bullish about it, nothing sort of bearish about it. But that's the thing. It may not be bearish per se, like, it's not lower lows and all the, well, yesterday we got a lower high. We haven't got the lower low to sort of back it up yet. But the thing is, it's sort of like, yes, you can wait for the confirmation, but that's almost $100 away. And obviously that's a larger time frame than sort of I trade at least. But to sort of wait for that sort of bigger move down here. But the thing is, it's sort of like these are the early indicators where we can see the market, how the market's reacting. And back over here, we sort of this is the tariff stuff, and I covered this at the time. These are the Iran attacks, US attacking, these kind of things, and the market's using these occasions to sell into it. It's not going, hey, look, you know what? Let's sort of take this higher, that kind of sort of thing. And as I said, on Friday, I put out a video saying, about the spreads, and the spreads were sort of moving right out. We had futures kick right to the all-time high. So if you look at this against the futures here, so put this one on here, new scale, new price scale, and we can see, beautiful, that's great. That's the gold color we want to use there. Take the pictures off here. So you can see sort of like this sort of gold line here is the futures. It if you put it just like this so you can actually see. Here are your highs, your highs, your highs, your highs. This took out and gave an all-time high with the futures last week around that Friday session. off the back of this headline that gold was going to be tariffed, and futures went bang, moved up here. All spot did not. Spot did not sort of follow suit. And obviously, since a couple of things happened, futures come back down. Spot's dragging it down. We've also sort of had a little bit of clarification from Trump, sort of saying that it's not going to be tariffed. I haven't actually seen anything official on that yet, but Trump said it's not going to be tariffed, and so the market said, "Yep, cool." That confirms our little sort of pull back down over here. So let's put a little alert just underneath that daily wick. It's like down under 330. I think there's an interesting thing as well not interesting thing, but sort of like certainly if you're trying to sort of mark up your charts, put the alerts where sort of like you'd want to sort of see it happen. If you're not sure where to put a support or a resistance or whatever, where would you want to see it happen? Well, taking out that lower wick means that the buyers, absence of buyers there, most likely you're going to see a bit of a move down here. And as you can see, it's pretty clear traffic on this last candle. That was coming back off the NFP. So should this thing sort of break under 330? I think we're looking, as I said, 3280 to 3300 for a higher time frame test of supports there, which we can see back in this level over here. Potentially more to come here. Just bear with us 2 seconds, just going to manage some positions. And although I'm sort of looking for the downside here, I think with these things you need to at least sort of look at sort of both sides and stuff. I've got a little alert going off, so Aussie attempting its flip. Consider both sides of it all underneath that wick from last night. So 33.30 is where we sort of said, okay, the move down. If you can move back up, not even out of this thing, maybe a close above 60, but take out sort of 65, this kind of area here, you might see a bit more of a move up, I would say. But most likely, I'm still looking for downside moves through here, particularly if we could see some sort of push up on the US dollar. And move along, we've got Aussie. As you can see, Aussie sort of came back up here. There's a very sort of tight, 4-hour candle. Gap down, close the gap, and now it's flipped. We're looking to sort of push back down and sort of negate a little bit of this big bounce move here. So in terms of where Aussie's at with it all, we saw this big massive rally back up here yesterday because, as I said, this was the move through the RBA. Sold down 15, 16 points or so, straight back up. H2O headline or whatever the chip name is, headline from China about NVIDIA, sold down, dribble into the lower sort of support areas. This was obviously mainly on the expectation probably that you were going to see a push up in US inflation, which obviously strengthened US dollar. And this is what I was saying yesterday. I put some posts on X saying that expect US dollar to firm up because it was pricing the idea. That's what the expectation of the market was, that we were going to see a hotter print. So US dollar people positioned for that. It obviously didn't happen. We see a quick unwind, and that was the first unwind here. And then look, it didn't seem too bad, as I said over in a couple of times. Like the US dollar buying wasn't sort of like, oh, crazy bang. It wasn't like the one move took us all the way up over here. It was that, then the conjunction of those stupid headlines from Trump afterwards as well, that really sort of got it for that double whack up to the top. And really, it just came up here, and this is what, about 1 o'clock. So just after those speakers, and just sort of consolidated. Really around these highs here, it just took, didn't quite get to taking out these wicks from the other day, but you can see this sort of higher time frame sort of resistance area. This is very much where the market said, yep, cool, that's it for us, and we're pushed up over here. So we'll see how this happens. If this candle sort of continues back down, put the alert a little bit lower, just to give some breathing room here, because it's actually a lower time frame support. If this thing sort of continues back down over here, then you're targeting back down at these levels around 65. But structurally, it's holding well. What it has actually done here is we had the first retest of the breakout point, and this is a second retest of the underside of this sort of channel that it was using as a bit of a recovery channel from this larger sort of sell down. I think this is the make or break time. Is this thing going to sort of just roll over and then continue back down over here underneath sort of 64.80? I think that's a sort of a confirmation, which is a little way off now, still 45 points or so for it to sort of come back down to sort of confirm that. Up above sort of, 65.50, above the 61%. And I think this could be just a bit of a shake off and move up here. But the fact that it sort of broke this kind of channel and it's retested, to me, it looks like the market is paying attention to this. And so with that, I think it needs to be honored for the fact that it broke and it's retested and it needs to sort of move back down over here. So I wouldn't necessarily be buying Aussie at this point. If you want to buy Aussie at maybe around the 65, could look a little bit better. But I think that, as I said, I think the market will shake off the overnight action and will sort of resume the direction that it was sort of moving before. Move along, have a look at what no, silver. Here we are. Keep on track of what we're doing. So look, structurally, it's moving okay. This is the weekend where I sort of said, look, it's come up here. It's at 61%. It's consolidating. It had broken the trend, and this is what I say. Like when you break the trend, you got to respect that a little bit, and you got to see some sort of pullback of these things. Now, this is actually looking more constructive. So this is what I said on the weekend that if this thing is to move up to retest these 39 kind of levels, you don't want necessarily, well, I didn't want to see just another straight V-shaped recovery. V-shaped recoveries have been coming a lot, but they're not sustainable and generally they lead to another sort of pullback. What you want to see is this kind of move here where you've got buyers here, they've pushed up, the sellers have come in, and the buyers have moved up their bid. Now you've got a sort of a three leg move. You've got to move up, resistance, move back, support, move up here, define this thing, and now you can justifiably build that structure which can show and confirm that the buyers are moving up. It's not just a sort of squeeze of shorts, if it makes sense. It's obviously moving in the same direction, but different reasonings for the price action. So, where it's moving here, it's sort of come back, it's retesting and sort of finding support pretty much on point. This is a long-term 15-year level. So we saw this as a backtest level just before it went to those most recent highs, trying to hold here again. Now, doesn't mean that this has come back and found support here, that's it. It could still come back down deeper. Look, it could still actually sort of break these lows and come down over here. I think the sort of two trades of this, if you break this area through here, you're moving back down over to this. If you break this area, you're moving up over to here. I think that's the sort of play here. So you got to sort of ascertain that it's either 1, 2, and it's going to test these, break through and move up like this, or is this going to sort of come back down here, fail this area here, which in turn, if you look at just this structure, this gives it a lower high. If it breaks this low, well, that's a lower high in this rally attempt of that structure, and that opens the door to then lower high, that'll make it a lower low, and you'll be looking for this thing to dribble back here. And quite frankly, then I think you're sort of going back to looking at 36.40 levels, back down at these lows here, which then builds into the bigger structure of 1, 2, and then you're testing. Are you going to get continuation to this lower low, double bottom, higher low? At the moment, you've got the higher low. It's trying to hold that. But should this first pullback break, I think your next sort of point of call is to sort of come back down to these lows over here. So as you can see, it's the same sort of structure. It doesn't matter sort of what price, what time frame it's being done on, but that's the battle of the buyers and the sellers through there. So it's a very nice sort of structured setup at the moment. But as I said, I think above 38.40. Give them take a bit of change there, or below sort of say 37.40. I think that's what's going to give you your sort of direction with silver. And you've got pretty clear sort of targets, fairly decent sort of little risk reward targets as well. But up over here, down over here. That's not too bad a trade. Should the market get onto it. Move along to copper. Copper's dribbling up. Sort of, it did break this. This actually, again, quite a nice little structured sort of play here. I was looking for a bit of a move down. I still am looking for a move down here, but obviously that's been negated for now. It's broken through this little triangle. Found resistance on point. Back test top side of this falling resistance. Put in a high, on it goes, and starting to move up here a little bit. So we'll sort of see how far this continues, but I think the fact that you've got this big move like this, I think still puts the risk to the downside. But for me, if anything, I'll probably be waiting up, see what happens around this 23. This is that low over here. I covered this the other day that sort of like, when you get these large moves that just cut down through everything, there's going to be people that had their buy orders at these levels. Like they're reasonable levels to expect had price come down to it that you would have found a rally. I mean, we saw it find support on point down here. But, if you get up to these, are people going to go like, oh, that's okay? Or are they going to just sort of go, well, you know what? I'll Geez, ASX is getting walloped. So I'll just have to show this quickly. That is a big sell down on open there, coming from all-time highs as well, but that's a profit taking for sure. Yeah, so with these big sell downs here, I think there's going to be buy orders that got filled through these levels. People don't freak out necessarily. Maybe if you're up here, you're taking your stops and that. But if you just got in at say 470 and that, most likely, you're not too far off the mark. But I would say most people just at least sort of alleviate their position. So I think that these kind of levels through here are going to provide sell down points. And so I wouldn't be sort of doing too much with it here. But should we get a little spike up to say 470, I wouldn't mind having a bit of a short here. See how it goes. Could squeeze a bit higher. But again, I think these levels are just going to really be ones that open it up to another drive to the downside. All right, 2 seconds. Cool. And finally move along, we got China. Look, 720 is still that line that we're looking at. And as you can see, the market's obviously sort of got it marked out there as well. So, on with this little grind through this patch here. The alert set, I think we got triggered. No, very close, but didn't get quite triggered for that move up here. This is very much sort of just what we said a lot. It's just like it's going, and poof, falls on its nose there. So, again, look, 720, that's the level that I'm looking for this one to alert. To move up over here. There is still the idea now that this does carry on moving down over here, but I mean, that's for everybody to make their own call, what they think is going to happen with it all, whether the market can sort of shake that off, or whether they're going to sort of claw onto that and say, hey, look, that CPI sort of didn't come in hotter, but it came in flat. I don't think that's cause for, hey, you know what, we need to cut rates right now. But it's just whether that sort of like that Trump headline that seemed to be the larger impact, more impactful move is the one that sort of the market's going to sort of sink its teeth into or not. I still think this is going to move up to the top side over here coming. So this again, as it moves up, is going to be putting pressure on Aussie as well with a sort of with a weaker yuan there. All right, that's it from me.